Yeah, good morning, everyone. Uh, Yesterday we saw US market opening lower, but ending at the top of the day and hitting a new all-time high. US market is consistently been supported by very good results over there, and market is outperforming the other market in the world. Apart from that, the futures are more of a flat for the US market, and Asian markets are marginally positive. The major volatility is being seen in commodity prices yesterday and today morning in China. LME and even in China, aluminum was down by over 5%, 5.5%. Copper is down by around 1.5%. Yesterday, LME zinc was down by around 3.5%. And iron ore today morning in China is down by around 3%, and steel is down by around 4.5%. These all major fall are coming mainly because of the coal shortage, which because of which the coal went up to a sky high prices are now correcting. The coal in China went up to as high as $300 plus, and now it has already come down to $200. The usual price of the coal thermal, that is thermal coal, is at around below $100, so it's still high. So these are all correction not only in coal, but because of the coal, a lot of industry got closed and a lot of supply shortage got created artificially, like mentha oil, PVC. All these commodities are also correcting over there, and this is all leading to corrections in the even metal prices because of coal shortage. Aluminum went up, and now because of the coal coming down, even the aluminum is also coming down. So one need to be careful in metal stock in today's trade. Apart from that, the other Asian markets and equity market are showing more of a stable trend. Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. Market last three trading session we see some pressure in Nifty, and we already mentioned yesterday that Nifty will trade below 18,200, then it will come around 18,050, 18,060 at downside. So we see yesterday Nifty break that important support level, and then it will come towards our next immediate support zone, that is 18,050 range. And we see yesterday IT, metal, and reality stock selling pressure. As per comparison, Nifty, Bank Nifty, we already mentioned yesterday that outperforming Bank Nifty, and we see yesterday's bank nifty break important resistance level, that is 40,000, and next important resistance is 40,270. Or yesterday we see that bank nifty break both the important resistance and close near the resistance zone. So we expect the positive momentum in banking. Nifty today we expect open a positive note and flattish. And upside immediate intraday resistance for Nifty is 18,240, 18,250. If Nifty sustain that level, then we expect further momentum towards 18,350, 360 in upside. And the downside support place around 18,100, 18,050 in downside. To expect Nifty trading within the range, that is range is 18,100 to 18,360 range. In Bank Nifty, next important resistance for Bank Nifty. Bank Nifty today entered a break again, 40,270 range. Then we see the positive momentum in Bank Nifty again towards for 40,500, 40,700 in upside. And support place at Bank Nifty is intraday support is 40,000, and in a delivery base 39,770 is the next important support for Bank Nifty. And Nifty Finance also break important resistance and close above that important resistance, that is 18,950. 18,950. The next important resistance for Nifty Finance is 19,120, 19,200 and above. Support placed at 18,880. for intraday base, and delivery base 18,740 is important support for Nifty Finance. So yesterday we already given a call in banking stock, that is SBI, ICICI Bank. So we can also see the today momentum, because both stock close above important resistance level and break closing with volume. So we expect the further momentum in SBI also towards 518, 520 target. ICICI Bank 770, 718 upside. To expect positive moment in these two bank. And third, today HDFC Limited looks positive at current level. Upside target around 2940, 2950 in upside. Support we can see around 2810, 2800 at downside. So we can keep watch this stock also for today's session. That's it for technical. Derivative I can carry.
Yeah, thank you, Vikas. See, from the derivative end, as we had been saying from the last 1 month, even though the markets went up 500 odd points from 18,000 to 18,500 odd levels, the VIX was VIX continued to be elevated. It was around 16, 17 levels, and then because of the high VIX, you saw such high volatility and selling, which has come in the last few days. Even now, the VIX continues to remain high, and that does mean the risk has increased. Unless this goes down below the 15 levels, such kind of moves have to be expected. So again, now with the overall scenario, 18,200 becomes an important support area along with 18,000 levels, with the highest put base around the 18,000 levels. If we continue to sustain above 18,200 levels, we might see a range bound action in between 18,200 and 18,500 odd levels for Nifty. However, if the VIX decreases, there are very good chances that the Nifty can break above the 18,500 odd levels. But everything remaining equal, the VIX has to decrease. The PCR is at comfortable levels, and so is the open interest. So nothing to worry from that side. From the stock specific front, banks have been doing pretty well, and some good open interest has been built in. So ICICI Bank, Axis Bank look very good in the private space, and SBI, Canara Bank look very good in the public space. So one can look to buy these stocks. Um, Also, the metals, even though we saw some good selling pressure in the last 2 days, there's not much short built up in the metals. So be ready for a rally from the metals pack as well, because they are likely to reverse, and they are likely to move up in the next few trading sessions. That's it from my side. I like to ask the fundamental team to take.
Jan, your voice is very low. Not able to hear you, dear.
Yeah.
Yeah, it's okay now.
IDFC has appointed Citigroup as the investment banker for divesting their mutual fund. So this is positive. Canfin Homes result was in line with expectation. Disbursement was highest ever at 2,200 crores, which is above what the management had guided earlier. So company is on track to reach loan growth of 18 odd % by the year end, which will be good. Although slight disappointment on the restructured book side, management had guided for 2% kind of book, but it has come at 2.77%. So slight disappointment, but I think that overall market will focus on growth, since growth has resumed now for the whole housing finance space. So focus should be on that, and not on a small miss on restructured side. So overall we remain positive. ICICI Lombard posted a mixed bag result. Although net premiums increased 32% year on year, which is healthy, but the combined ratio came at 105% against expectation of 100 odd percent. So neutral result, but view is positive. IIFL Securities result improved. The brokerage revenue grew by 9% quarter on quarter and 38% year on year. This compares a slightly better or probably in line with ICICI Securities, so more or less in line. Company doesn't have any unique ability to gain market share or any USP. So that is why for the longer term perspective, we are neutral. But because of this performance, maybe short term there can be some good reaction. IDBI Bank result improved. Quarter on quarter loan growth was one of the highest we have seen in the banking space at 7%. Net NPA was flat at 1.6%. Bank holds contingent provision of 0.7%, so no issue on asset quality side. However, on valuation slide, it is slightly high at 1.7 times trailing book value. We remain positive here. Bank of Maharashtra result improved. Quarter on quarter loan growth here also was healthy at 5%, and year on year also loan growth was at 14%. Net NPA declined from 2.2 to 1.7%, which is good. ROA, despite this overall improvement in the P&L, the ROA has inched up from 0.3% last year to around 0.5% in this quarter. So a bit on the lower side still, despite good performance. Stock is at 1.3 times book value. So if this performance going forward improves, then bank can do well. Sterlite Technology result was in line. Revenue up 30% year on year. EBITDA margin stable at 17.5%. It remains a decent play on the 5G adoption, mainly in India and Europe. So we remain positive here. TVS Motor result was marginally ahead of expectation. Company was able to pass on the increase in raw material price by taking good increase in good price hikes. Company has mainly created a subsidiary for the EV business, and it will be aggressively creating capacity next year for on the EV side, which is a move in the positive direction. And also company will be applying for PLI scheme as well. So overall positive for TVS Motor. We are expecting around 14 odd % kind of volume growth over next 3 years for TVS, and it should outperform the industry. Indian Hotels result was ahead of expectation. Basically, if you see around the 4 hotels have given results till now, and performance of all have been similar. Companies' sales were down 28% compared to second quarter of the normal year, that is the FY20 pre-COVID. So although on a QOQ YOY basis, there has been a very good growth, a V-shaped recovery. EBITDA margins have also come in above estimate at 10%, despite occupancy rates being in the low 50s. So this is mainly led by cost optimization efforts. So whenever recovery comes, margins should continue to move much higher. We remain positive here. Indian Energy Exchange result was marginally above expectation. Sales and profits grew by sales grew by 54% year on year, 21% quarter on quarter, and profits have actually surpassed the sales growth. The profits grew by 66% and 24% quarter on quarter. On macro side also, government reforms will help the company as more and more electricity contracts start happening through the exchanges. So we are positive here. Also, company has announced a bonus issue in the proportion of 2 shares for 1 share held. So that's it from my side. Thank you.
Yeah, Akansha or Avish.
Yeah. Good morning, everyone. Mphasis has posted inline set of numbers for the quarter, with dollar revenue coming in at 385 million versus expectation of 382 million. TCV came at $241 million versus QOQ of $505 million. Share is trading at 36.8 times FY23 EPS. India Mart has posted marginally below expectation numbers both on the revenue and the margin front. Deferred revenue came at rupees 756 crores versus QOQ of rupees 751 crores. Share is trading at 64.5 times FY23 EPS. Trident has posted improved set of numbers for the quarter with revenue improving by 14% Q on Q. EBITDA margins came at 24% versus QOQ of 25.5%. Share is trading at 26.8 times FY22 EPS. Tanla platform has posted improved set of numbers for the quarter with the revenue growing by 34.4% Q on Q. Margins came in stable at 21.2% versus QOQ of 21.5%. Other than this, Container Corp has posted inline set of numbers, in line with expectation set of numbers for the quarter. Thank you.
Yeah, good morning. JSW Steel reported result broadly in line with expectation. On standalone front, the sales volume came at 3.8 million ton versus 3.6 million ton quarter on quarter. Realization came at 72,600 per ton versus 17,860 sequentially. EBITDA per ton came at 22,880 per ton versus 26,290 sequentially. On consolidated front, revenue came at 32,500 crores versus expectation of 32,109 crores sequentially. EBITDA came at 10,417 crores versus expectation of 10,450 crores quarter on quarter. Margins were in line with expectation at 32%. Management remains optimistic about the demand going forward in second half on back of improvements in construction and infrastructure projects. The management has maintained its production guidance of 17 to 18 million tons for FY22. Coking coal cost going forward will increase by $95 to $100 in the next quarter. The Q2 average cost was $158. As such, at current price, there will be further increase in coking coal cost in quarter four. Decline in iron ore price will partially compensate the increase in coking coal cost. Company has taken 1,500 per ton price increase in flat and 3,000 per ton in long products in October. The imported thermal coal cost will increase, and the power cost will also increase for the company going forward. Apart from this, the company will have a higher volume of 1.4 million tons from Dolvi expansion in second half of FY22. The Bhushan Power will, which was reported as an associate company up till now, will be consolidated as subsidiary from Q3. Bhushan Power has done EBITDA of rupees 2,022 crores in Q2 and has a debt of rupees 10,000 crores. We are positive on this company. Then, apart from this, Rajratan Global Wire Limited posted good set of results. Revenue came at 241 crores versus 182 crores quarter on quarter and 139 crores year on year. EBITDA came at 51 crores versus 36 crores quarter on quarter and 26 crores year on year. Margins have also improved from 20% to 21% sequentially. Thank you.
Yeah, apart from that, Asian Paint yesterday reported results that was in market hours, and we saw a good corrections in the Asian Paint prices. That was mainly because the margin came quite low as compared to the expectation of around 16%. The margin came at 12%. In fact, Asian Paint was reluctant to pass on the increase in the cost, which has happened in Q1 and Q2. So now they had taken some price increase in Q2, and now also further in before Diwali season also they had taken price increases. So partially they will be passing it on in the coming quarter. Anyhow, Asian Paint has pricing power, but they don't want to take. They were concentrating more on increase in volume than taking price increase. as such, we saw a decline in the margins. I think with going forward with the normalization of the commodity prices, the margins will stabilize or they will increase the prices. So overall outlook from here will be positive from a long-term perspective. Short-term, quite possible they may not be able to reach their normal margin of around 18% in near term, but over a period, Asian Paint we had seen in the past has shown quite resilient and has shown improved performance over a period. So any good correction in the Asian Paint will be a good opportunity to buy. Apart from that, Heritage Food, that's a milk company, has shown improvement in the results quarter on quarter. So as such, quite possible the other milk companies can also report comparatively better number quarter on quarter. Biocon has also come up with result which were above expectations. So out of the total results which has been declared yesterday, Tanla Solution I think can be watched. That result is quite good and valuations are reasonable, and stock was consolidating in last 6 months, so it can give some breakout. Apart from that, result on next Tuesday. ABB is likely to report number, and numbers are likely to show improvement. Revenue is likely to grow by 10%, but margin is likely to show improvement both quarter on quarter and year on year. So as such, EBITDA is likely to grow by 25%. So ABB is likely to report better number. Ambuja Cement, again, it will see quarter on quarter decline in EBITDA per ton by around 300 rupees. We had seen in case of Ultratech and ACC, it was lower, but lower than around 200 rupees. But for Ambuja Cement, it is expected at around 300 rupees. So will be lower than the other its peer. So results are likely to be more of a okay and known. Then Axis Bank is likely to report number. Here, loan growth is expected at around 10% and slippage expected at around 4,000 crore rupees versus last quarter number of 6,500 crore rupees. Results are more of a likely to be okay, but a commentary will show how the key thing will be to watch is the commentary, how company want to grow in the coming period. Then Bajaj Finance is likely to report numbers, and here we had already seen that the company has announced AUM growth of around 4.9% quarter on quarter and 22% year on year in their quarterly update. But apart from that, NIMs are likely to show marginal improvement, and credit cost is also likely to come off from 4.5% last quarter to around 3.5% in this quarter. So results are likely to be better. Then Cera Sanitaryware is likely to report number. Here again, margins are likely to show improvement both quarter on quarter and year on year, and revenue is likely to grow by around 15%. So results are likely to be better. Whereas Cipla is likely to show declining set of number both on the margin front. Margins are likely to show some corrections as the raw material cost has increased. The margin can come under pressure, and revenue growth is also expected at muted at around 4-5%. So Cipla result is likely to be declining. Then Indocount, we had seen Trident result yesterday, which has come good, and Indocount is also likely to show better number. Indian Metal and Ferroalloy is also likely to show good numbers as ferrochrome prices has moved up in this quarter, and corresponding to that, though there is an increase in the coking coal and coke prices, but the increase in the ferrochrome prices are much higher than the increase in the cost. So Indian Metal and Ferroalloy results are likely to be good. Similarly, Jindal Stainless is also likely to report number, and numbers are likely to be good. Then Kotak Mahindra Bank is likely to report number. Here again, the loan growth expected at around 9-10%, and credit cost will decline quarter on quarter. Like HDFC, which has given good guidance for the growth in the coming period, Kotak is also expected to give a good growth guidance for the coming period, so which will support the share price of the Kotak Mahindra Bank. Dr. Lal Path's lab results are likely to show some decline quarter on quarter, mainly on account of declining COVID cases, and large volume came from COVID cases in the last quarter, though year on year the revenue and profitability will show improvement. Then MGL is likely to show result, that is Mahanagar Gas, and here because of the opening up, all cars are running now on CNG and all, so the results are likely to show good improvement both quarter on quarter and year on year. Then Nippon Life is again likely to show better number, both because of the increase in the AUM and also because of the increase good market condition in the last quarter. Revenues are likely to grow by around 30% and PAT is likely to grow by around 25% year on year. Persistent System is likely to report numbers and the results are likely to show improvement. Revenue growth is expected at around dollar revenue growth of around 8.2%. There will be a wage increase, and because of this, the margins are likely to show some softness. But because of the high growth in the revenue, the wage increase will be quite absorbed, and results are likely to be better. PI industry results are likely to be okay. Then Sarda Cropchem, another agrochemical company, the results are likely to be okay. We had seen that Rallis India has shown disappointing number. So other agrochemical company can also follow because of the increase in their raw material cost. The prices has shot up for their raw material. As such, the impact on the margins can come off for all these agrochemical companies. Then Symphony is likely to report a declining number. We had seen that yesterday. Havells India in that Lloyd, which is in AC, has seen lower demand and pricing pressures, and as such, Symphony can also see similarly poor result. Then Torrent Pharma is again likely to report okay set of number, not much growth of around 7-8%, and margins are likely to remain stable. Then Webco India is likely to show improved result. We had seen that most of the truck-related, CV-related ancillaries had shown good results and improvement in margins and revenues. So similar thing can be visible for Webco India as well. And last is Gensa Technology. Here the results, though apparently will be looking good because of the acquisitions, but organic growth is expected at around 3% quarter on quarter, and there will be margin pressure because of the salary increase which has been given in this quarter. So overall result is likely to be okay. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.